So that was the conversation, and it foreshadowed the fact that we think Bitcoin was gonna be way down. That was 10 days ago, and when it goes way down, basically we just jump in and buy and store it for the future.
Yeah, I mean that's what I was saying a minute ago. That there's two clear narratives that have really developed now, right? Like 6 months ago, nobody cared about the difference between Bitcoin and crypto. It was just like, are you buying Solana? Are you buying Avalanche? Are you buying Ethereum? But now everybody knows, wait a minute, Bitcoin is the one that has stood the test of time and is going to stand the test of time again.
Mm-hmm.
So everybody's kind of going back over to the Bitcoin maximalist side of things, at least temporarily right now. And that's what got me thinking about, okay, well, where's the best place to keep Bitcoin? And obviously everyone's going to say hardware wallet, but I wanted to find for myself if that was true. I wanted to stress test that concept.
Yeah. I actually do look forward to watching that video of yours, because I'm trying to solve that problem for myself as well. But believe it or not, guys, I would have been happy just buying an ETF, a Canadian ETF or a European Bitcoin ETF. Like Brian said, it comes down to a philosophical question. Are you buying Bitcoin because you think the Canadian, Australian, European stock exchange is going to collapse? Government's going to collapse. If you think they're going to collapse and they're going to come after you with CBDCs, then you better use the Trezor wallet. If you still believe in them, anyway. Okay, so I think most people wanted to hear about the direction of Bitcoins. Would you like to go first, Brian?
I wanted to say one last thing on that hardware wallet topic. The funny thing is, given how important hardware wallets are, I mean, not your keys, not your coins, you think that everybody would know how to use them, right? But I did a survey, and only 20% of my followers consider themselves like proficient in using a hardware wallet. So I thought that was really interesting. So this is a topic that we can all get our minds around. Okay, so as far as where Bitcoin is going, I mean, it's kind of like everyone is spoiled. We're like spoiled kids in the kindergarten, cafeteria that always get the snack that we want, because in the last 10 years, we've never had a real economic downturn, right?
Yep.
Even the pandemic, right? March 2020 was just a quick flash crash down, and then we were off to the races with money printing and low interest rates. So I do think it's important to recognize the general, economic situation right now, that the macroeconomic situation is so different now. I mean, we just saw something historically that we've not seen in Bitcoin's history, which is that we go below the previous cycle high.
Yeah. Oh, I see. Okay, so excuse me for a long answer, but this is what I've been trying to tell everyone. Okay, in my Discord, here's the thing. Like, I came to social media rather naively. I didn't know much about social media. I just shared my thoughts because, I used to be an investment banker, and I do know something. I do know a little bit about finances and world geopolitics. So I shared my thought about Bitcoin, and then it blew up, so I kept on talking about it. I hadn't used social media much before, and so I didn't know the reaction was going to be like that, and I especially didn't know Bitcoin fans are so passionate. And it's not like arguing about soccer. When I got the timing wrong on the 20K Bitcoin call, not the fundamentals wrong, I got the timing wrong. Well, you can say maybe the Federal Reserve got it wrong, because they should have fucking hiked rates and took Bitcoin to 20K this time last year rather than now. So, okay, I'll admit it, the timing was wrong on my part, when you could say timing was actually wrong on the Federal Reserve part. And after that, people started criticizing me and shit. So I said, okay, whatever. I'll just talk to my paid members. I'll tell them, the things that I speculate to be true, but I'm not 100% sure about. And I'll only share things on open publicly that I'm 100%, 99% sure about. So the things I kept on saying, and there are a lot of people from my Discord that are listening, and I'll put this out, as a public video as well. And, people are like, oh, you never called the crash. Let me just say this to you. I have thousands of paying members. They're listening to this, and they're going to be watching this when this is put out as a public video. I'm recording this as a video as well, and this is going live on Instagram as well. Now, just think about this. If what I said is bullshit, if what I said doesn't match up, what do you think is going to happen to those thousands of paying members of mine? They're going to be like, oh, that never happened. He never called it. Anyways, the point is, what I said to them is, I said, I'm not accumulating Bitcoin until it gets below 20K. I've been saying that for the longest time. And I said, in my bones, I believe it's going beneath 20K. I said, but I could be wrong. if you really believe in Bitcoin, once it drops below 28.29, start pyramiding in. Not just dollar cost averaging in, not financial advice, by the way. This is how I would do it if I really believe in Bitcoin. But pyramiding, which means you buy $100 at 28K, and then it goes to 27K, you buy $200. It goes to 26K, you buy $400. It goes to 25K, you buy $800. So it you can double it. You can whatever geometric progression you want. It gets bigger and bigger, like a pyramid on the way down. So you buy much more on the way down. Because I actually fundamentally believe in Bitcoin. People don't understand that, and they think, if you really love something, you want to buy it as much as you can when it's cheap. So the coming back to your question of which is why would Bitcoin go below its previous high, which is what, like a 20,000 or so, around that area. I said to a lot of people in my Discord when they missed out, when I called 20K, a lot of people are like, oh no, we missed out. It bounced from 20K, from 28K back up. So a lot of people were panicking outside and in my Discord. I said to the folks, I said, don't panic. I said, one, we don't know if when a bear market comes, it could get to 20K again. And two, if you miss Bitcoin, it's not as special as you think. The days of Bitcoin doing like 100x's are gone. Two things I'll say about Bitcoin to answer your question. One, I said Bitcoin's not as special as you think. People keep on saying to my Discord, Bitcoin has never done 4 weeks of red candles going down 4 weeks in a row. I said, yeah, just because it hasn't done that in the last 12 years doesn't mean it's never going to do it, because Bitcoin's only 12 years old. It's a very, very young asset compared to gold. You would never say gold has never done 12 weeks, 4 weeks, whatever. If you look at the charts, Bitcoin has done 13 weeks of red candles in a row now, with only one green candle in between. And that happened at week 9 or week 10. So it's done like 7 or 8 red candles, 9 red candles in a row weekly. So first of all, that has been broken. Secondly, people say things like Bitcoin has never gone down to its previous cycle high before. I'm like, yeah, in the last 12 years, whilst the Federal Reserve is printing money and doing QE, like it's like there's no tomorrow. So in an environment where Fed goes the opposite way and starts doing QT, what do you think is going to happen to Bitcoin? And the Fed goes on a hiking cycle that is the fastest since 1994. I would say right now we're probably on pace to be the fastest since 1979. In that kind of environment, plus QT, remember they didn't have QT back then either. What do you think is going to happen to Bitcoin? I doubt all those things that never happened to Bitcoin before. You're looking at a 12-year history. Like, it's, what do you think of this, Brian?
Yeah, I mean, it's interesting what you said, that Bitcoin is not special anymore. Like 10 years ago, Pablo and I would not have been the right guys to cover Bitcoin, right? It was a nerds thing. Yeah. It was a technical nerds thing. Pablo and I come along about a year ago, and we start saying things that no one else is saying. And that's also the reason, by the way, that we're going to be here throughout the bear market. Have you guys noticed that a lot of the crypto influencers now don't know what to talk about? They're like, should we start a garden and talk about, like, what they don't know what to talk about. But Pablo and I are like, wait a minute, we're approaching this from a macroeconomic perspective with macroeconomic experience. Pablo is a prior investment bank trader, and so this is just another day in the field to us. And yeah, that's exactly right. Bitcoin is exposed to macro forces right now that are totally different.
In fact, I agree, Brian. Brian, just to quickly interject that 10 years ago, you and I would have looked at this thing and said, it's a stupid little toy. It's a Ponzi. It'll be gone by tomorrow. I bet guys like you and me would have missed it 10 years ago. Seriously, like I can admit that. But now the thing is, the good thing is now it's actually so correlated, like with the stock market. It's like the US dollar or the bond market, so that it's so much easier for guys like us to call it. Like last week I just said CPI comes out, it's a bad number. We're going down to sub 20K, 12K is even possible. Sorry, I interrupted. Hello, Brian?
Yeah, no, yeah, that's exactly right. It's it's an asset class right now that is exposed to macro forces. And I had a friend of mine who actually had a very large amount of Bitcoin email me this morning, and he said, "What's up, Brian, with LA Times, New York Times, Wall Street Journal having all this bad press about crypto? Crypto's dead, crypto's over." And I said, "Well, that happens in every bear market, but the difference is this time the institutions are listening, and it's correlated right now to the stock market, and it's going to be for a long time. Now, will it be correlated forever? No, I don't think so. I think that, while a lot of these corporations are inflating their supply and adding new shares and all kinds of other reasons why they're diluting their investments, Bitcoin's never going to dilute. As we know, it's got a limited supply. So I strongly believe that Bitcoin will uncouple from the stock market and have some more big moves upward, but we're nowhere close to that yet. But it's not special anymore. I love the way you said that, Pablo. That was perfect. It's not special anymore. We could call the whole conversation right there.
The thing is, look, guys, there are people still in my chat typing things like, "Yeah, not special anymore. Bitcoin made like 3 million% even today compared to 10 years ago." Here's the thing, guys. Bitcoin is special case in that we are literally witnesses in our lifetime to a new asset class, to a new financial asset being born, and that hasn't happened since they say the 1680s, when the Dutch, the people of Holland, the Dutch invented shares, because they had bonds before, and then they invented shares, stocks. There hasn't been a new. There's always been houses. There's always been gold. Commodities. There hasn't been a new asset class called crypto or Bitcoin until now. So this is it's special, not just from a naming like technical point of view. It's special in that, okay, it's like discovering gold from zero. So when Bitcoin first came out, what was it trading at? 0.00001 cent or whatever, six zeros before it, and then went from there to like $1, like $10, whatever, $100, and up to $69,000. So the point is, if if humanity never discovered gold, and then all of a sudden, like in 2009, everyone's like, "Oh, there's this thing called gold, and you can store your money in gold. It's a store of value." If that thing started in 2009 and gold suddenly shot up to say 1/8 of where gold is right now, it would also be like a 3 million% gain, and people who bought it on day one would also be up like 3 million times or 3 million%, whatever the number is. That's the thing about Bitcoin, because it came from zero. Once the market cap of Bitcoin right now is something like 1/8 or 1/15 of gold right now. So that tells me if it's gonna become equal to gold or toe-to-toe to gold, or maybe one day be as big as gold, or even bigger, it's got like another 15x to go, like minimum to match gold. So it's already a known asset now. It's not coming from zero anymore. The reason why gold only like doubled in the last few years, even though there's so much inflation and money printing, is because gold's already up there. Like it's already like a $8 trillion market cap asset. So that's the reason why. So that's what I mean by it's not special anymore. It's had that massive run up. I do agree with Brian that it'll decouple from the stock market and make more run-ups as the world more and more sees that we need something. I wouldn't say we need Bitcoin, but I would say we need an alternative to the US dollar or any fiat currency, the euro, the Russian ruble, the Chinese yuan, the Japanese yen. We need something alternative to that, because CBDCs are coming and all this shit are coming. Governments can literally tell you what to spend, what you can buy, what you can't buy. So that day is coming, and basically people will be like, we need an alternative, something like gold, but you can carry it around. So that's what Bitcoin is to me, really. So in that sense, I think it's not special anymore. So, what do you think?
Yeah, it's a good time to go back to talking about the fundamentals of Bitcoin, and since those fundamentals are needed more than ever now, it's still a good investment. And so, it's just like Apple stock maybe isn't special anymore, but Apple stock can still 2x or 3x in a couple of years because it's a very good investment still. So that's kind of how I feel about Bitcoin. It's still a very good investment. We need to get away from the mindset of when Lambo, when Moon. We need to go into, it's a good, strong fundamental investment.
What about
have patience?
What about when melt up?
Yeah, when melt up, right?
No, sorry, go on.
Yeah, where are all the melt up folks? The melt up. I'm not a charts guy and a price predictor guy like Pablo. He's much better at that than me. But the melt up personally never really made a whole lot of sense to me. I mean, we can have bounces, but the melt up followed by the crash, I never was really on. I never saw that.
Okay, I get asked this so often, and people get so confused. They're like, "You said it was going to go up. You said." I said, did we not have this big conversation last week when we were here? And I think thousands of people heard me when I put it online as well. I kept on saying it's going to be a bounce, not a melt up. And people are like, for people who don't understand what it is, they might think you're playing game with words. I defined it. I said a melt up is when you think something's going to take out the old all-time highs. Like a meltdown goes like this. That's what Bitcoin just had. A melt up goes like this. A bounce, people might call it a dead cat bounce, right? Or if it's not dead cat bounce, it can go like up to 40K, even 50K. Where from say Bitcoin was at 30K last time we spoke, can bounce up to like 40K. Like in the most extreme optimistic circumstance, can even bounce up to 50K and then turn down. Nowhere near the 69K high. That's what a bounce is, right? I said this is, by the way, a good time to clear up what I said about Bitcoin last time. People were saying talking about 12K Bitcoin, 11K Bitcoin. I specifically, and I put that video out there, in this space last time we spoke, I specifically said 11K to 12K Bitcoin, 10K Bitcoin, that's not out of the question. It could easily happen if we get bad CPI numbers. And I didn't know this, I didn't know 2 days later we'd get a CPI number that would surprise everyone, and it went down to 17K, like in the next 4 or 5 days. So the thing is, because I once this bad CPI number came out, I knew it was going to tank hard. I just didn't know how bad. I wrote beforehand in my Discord, I said, if we get a bad CPI number like 8.5, 8.6, it'll go down to something like 24 to 26K to retest that old double bottom Bitcoin had before. And this is in my Discord, and I have thousands of paying members, and if you think I'm lying, well, they're watching this, right? They'll be watching it when I repost it on YouTube anyway. And then basically, once the market started going down, I was like, I sent out like about 4 videos saying that CPI number is bad, market's gonna tank, and I posted one of those longer videos, like I think it was a 20-minute video. I even time marked it for you guys. It's my last long video, 1420. I said, I think it's gonna do a head and shoulders pattern. Anyways, you can imagine what a reverse head and shoulders pattern, go down to about 21, 22, and then bounce up. So that call is right there. It's not a genius call once you know what the CPI number is, and that's what I try to explain to everybody. Now, people say I didn't call it in time. It's because I posted in my Discord for like usually a day or two, and then I let it out. I even say it in the fucking video. I say, I usually post these things for my Discord for paying members first, and then I put it out publicly in a day or two later, right? I say it in every fucking video. And and yes, this time, usually it's not that urgent. Usually 2 days later, the information is still the same. You can look at the charts. The price was at 27K when I called this. But what happens is this time, something like 28 hours after I posted it in my Discord, boom, the price went down. So I made it public. Anyways, the point is, it's basically the guys who said, to answer your question about the melt up, the guys who said it's going to do a melt up, for the stock market, there's a small chance they could have been right if we got the right CPI numbers, and it's possible if CPI which is the inflation numbers, by the way, guys. The CPI numbers went from 8.5, that was the peak, to 8.3. If we had like 8.1 or 8.0, then there would be some kind of melt up or a huge bounce to 50. When we got 8.6, which was the worst scenario I could think of, because it means the old high was actually taken out. 8.5, 8.3, 8.6. And then I was like, oh shit, this is really bad. I made videos to say market's going to tank. I made videos before the CPI number came out. I said, this is going to be a super important number. I mean, the videos are still there, right? I said, it could crash. I mean, on fucking Twitter, I said, last time a bad CPI number came out, it wasn't even a bad one. It was just a slightly disappointing one. And Bitcoin went to 24.4K. Just be super careful with this one. Anyways, it is, this isn't new. Like, we spoke about this last time as well. I specifically remember asking Brian, I said, Brian, who wasn't as pessimistic as me, I said, I'm more pessimistic, even though I'm usually a very optimistic person. I said, Brian, what do you think the Federal Reserve is going to do if, say, stock market's crashing, economy's crashing, jobs are, unemployment's going up, but inflation in the United States is still as high as 7 to 6%. What do you think the Federal Reserve is going to do? Are they going to cut rates to zero and start quantitative easing, which is printing money again? Do you remember that conversation, Brian?
Yeah, I do. And you were more pessimistic than me. That is true.
I mean, now, how do you see the Federal Reserve? Because we've had a 75 basis point hike since then. Do you think? Let's paint the scenario. Like in 6 months to a year's time, I see the U.S. economy nearing recession or having already gone into recession. But however, Federal Reserve is going to act because they look at one thing. They don't admit it, but they just essentially say it's jobs, it's votes, especially before November. If U.S. unemployment right now is at 3.6%, right now it is. It's lowest in history. And then if it goes from 3.6% to say 3.94, 4.1%, I don't think the Federal Reserve are going to stop hiking rates if inflation's still at 6 or 7%, which is why I kept on saying this bear market is kind of at best halfway. We're 1/3 or to halfway through. There's still another halfway or 2/3 of the way to go, which is why I kept on saying I'm pessimistic on this, even though I'm a very optimistic person. So having seen the Fed take a 75 basis point hike and having listened to the Fed, they said, Jerome Powell said what he said. What do you think now, Brian? Do you think that given the scenario of U.S., what would it take for the Federal Reserve to start lowering rates again if inflation's still at around 6%, 7%? What would it take?
Yeah, I mean, let's not forget that rates are still historically low and the economy is still suffering and inflation is still this high. It's really a bad situation. It's a perfect storm, and the Fed cannot hide from inflation. I mean, that's the main number that they look at. They can't hide from it, and I do think that it's going to crash the economy more than what we're seeing now. It's going down more. I'm not saying the Bitcoin price is going down more. I'm just saying the general economy is going down more, and it's actually a really good chance to buy Bitcoin. Now, I'm not going to be the one that says you should buy it today or buy it in a month or the price is going here, but it is a historic, once-in-a-lifetime opportunity. We might not have seen $17,000, $20,000 Bitcoin at all if those inflation numbers had not come out a little bit higher than last month. The Fed was expecting them to go down. The markets were expecting inflation to go down. Pablo did say, well, inflation might be higher, guys. You better keep an eye on that. He did predict that. Sometimes I think Pablo is from like 3 weeks in the future. Every time I see the news, I'm like, Pablo said that 3 weeks ago. Wait, and I'm like, did he really? Oh, yeah, he did. So Pablo is from 3 weeks from right now, guys. You should know that. But they can't hide from inflation, and it's going to be a once-in-a-lifetime chance to buy Bitcoin because, look, you guys, we have this weird perfect storm where inflation is out of control, which is what Bitcoin is for. The purpose of Bitcoin is a hedge against inflation. It isn't right now. It sucks right now. Might not be for the next year, but eventually in the next 5, 10, 15 years, it's going to be a good hedge against inflation. But at the same time, the price of Bitcoin is crashing to record-breaking lows. We all know that we just went below the previous all-time high. And so I think it's like this perfect storm. I'm buying Bitcoin right now. I mean, I'm not going all in, but I am buying. And I just think I'm happy that things are crashing. I mean, hopefully you guys took some profits too in the bull run and you listened to the boomers who were not moon boys who said this is not going to last forever. Take profits. Do you remember how many hate comments and trolls we got when we said take profits? People laughed.
Oh,
at
I think
clown emoji. You know.
I think I got way more than you did, Brian. So
yeah, so hopefully people took their profits and they're able to dollar cost average in, but you do need to strap in for the long haul.
Yeah.
This could be a long-term thing. It could be a severe recession. You can't hide from inflation. And you know what? The Fed is sort of screwed no matter what they do, because they cannot prevent the average American from experiencing pain right now.
Mm-hmm.
No matter what they do, the pain is coming. It's either coming in the form of higher inflation, which if they, let's just say they don't raise interest rates and they just relax things and they stop QT and everything, well, then every American's going to be paying more at the pump, more for housing, more for food for a long time.
Mm-hmm.
I mean, inflation is cumulative, you guys. It
Oh, hello, Brian.
Go down. Like, we might see a temporary drop in gas prices because they're so high, but most of the time, even if inflation goes down, prices are still hiking up. If the Fed gets inflation down to 3%, that still means the prices are going up 3% from where they are now. So we're in a shitstorm, and it's not going away anytime soon.
Okay, so I just wanted to I've been debating myself about this as well, to buy how much to buy. Like I've had small orders at just above 20, because I thought if it doesn't go below 20, at least I bought some, not hang around looking like a dick. And now I had some at 1990, just in case it dips below, but obviously not large orders. And you know, some people are probably panicking right now because it went down to 17 and now it's back to like 20.6 this morning when I checked. And people are like, oh no, missed out on 17 Bitcoins. It's never going to go down to 17 again. It's possible. It may never go down to 17 again. But as I kept on saying, it's not super special anymore. I don't expect it to do 100x unless the United States goes into hyperinflation. The only way Bitcoin does 100x from here is if a loaf of bread in the United States costs like $20 for a loaf of bread, or if it costs like $20 for you know, bottle of milk or whatever. When that happens, Weimar Germany happens in the United States, that's when Bitcoin will do like 100 to 200x. And that would be terrible, guys. Like that would literally tip us into World War III and World War IV. It's not a scenario you want to have. So the thing is this. I've been debating to myself about this as well. Where will Bitcoin end up? I'm just going to quickly show you guys this chart. So, for example, this is, let me just turn the camera around. So, for example, this is the Bitcoin chart from from 2012, right? So, last 10 years. And you can basically see that there's been this trend line from 2013 for the last 9 years has supported Bitcoin, right? And we've just hit that. Right? We've just hit that mark. So if you can see that blue line, it actually ended up closing. This is a weekly. The weekly chart just actually closed just above. It dipped below, just above, and we're here. So it's, I mean, these charts, like if people are in my Discord, they can see that these charts have been around for ages. I didn't just draw it like literally this morning. They've been around for ages. I said this 20, or is it 20K area obviously is going to be huge resistance. Support, and you have this massive like 9-year-old trend line supporting here as well. So this could be, we could get that dip down to 17.3. I thought it was going to be, came in slightly higher. 17.588 was the bottom, and that was the wick down, and then basically might bounce here, and could be the all-time bottom of Bitcoin. And you know, and Brian would be a genius for buying here, because if you didn't buy here, you probably miss out on lowest Bitcoin ever. That's possible. What are the probabilities of that? Now, if you look at that chart, when Bitcoin was up here around 60-something thousand, you would be praying for a day when Bitcoin went back to that trend line and came back to here. You'd be like, I would go all in right here, right now. I would go all in. That's what you would have been saying when Bitcoin is around 60K, 69K, whatever. The problem is this. I've seen a lot of charts, historical charts, which says right now Bitcoin is in deep discount territory right now. And it's true. If we judge by the past, I mean, if you look at any of these charts, even if you have, I've seen, logarithm charts. Someone used LGC logarithm growth charts to draw out Bitcoin, and basically it's near that historically cheap level as well. I don't deny that. Let me just turn the camera around. Here's the thing. If by any of those measures, Bitcoin is in hugely discount territory, it's a once in 3-year opportunity to buy near those bottom supporting bands again on Bitcoin. The problem I have with that is this. I haven't sent in huge buying orders yet. I've just been nibbling so that if this was a bottom, I kind of got the bottom. Like, I don't, but they're not huge buying orders yet. The reason why is this. I could look really foolish for not doing it, and this is out on public record. But what I think is this. You look at all those long-term supporting lines since 2013. You look at the LGC logarithm growth curves that supports the Bitcoin, and you look at any of those measures, shows Bitcoin at 17K, at 18K. It's fucking cheap. It's hugely cheap. It's historically cheap. That's true. So dollar cost averaging in, if you fear missing out on all-time low prices for Bitcoin. My big orders haven't gone in yet for two reasons. One, I don't think Bitcoin's that special anymore. If I miss it, it might go up another 3 to 4x in the next three years, like 5x, 10x maximum. I could purchase any property on this beach right here. Put 10% down if the price doubles in the next 4 or 5 years, which could easily happen. Then 10% down means I've 10x my money. And Bitcoin, as we all know, is a lot more volatile, and you lose a lot more sleep over it. I'm on a movie set and I'm like, oh, where's Bitcoin right now? Whereas I buy a house on a beach like this, it'll just keep on growing. I don't even need to worry. That's one. The other reason is this. All of the charts we've been looking at, which says Bitcoin is at huge support level, Bitcoin is at huge fundamental support level right now, it's historically cheap, is only true if you look at history of Bitcoin the last 9 years, 10 years, 12 years, whatever. As I kept on saying, Bitcoin is a very new asset. It's so new compared to gold, even stocks, even bonds, right? Houses. It's so new. So therefore, I do not expect that trend to hold up forever. That trend line that supports Bitcoin since 2013, those LGC trend lines that's been supporting Bitcoin since 2012, 9 years. And those 9 years are basically times of unprecedented money printing because we had that crash in 2009, the GFC, global financial crisis. So Bitcoin has had this amazing bull run in an environment where there's lots of money printing. There's a lot of that going on. And that's why, by that standard, that chart makes sense. Yes, we're in historically cheap territory if the Fed is still in a neutral to quantitative easing stance. But we're not now. The Fed is doing something it hasn't done for 13 years, which is hike rates this aggressively, tighten aggressively, and also quantitative tightening, QT, this aggressively. And basically, that means that chart, those long-term supports, I doubt they're going to be still as useful as before. So, which is why I think a lot of those long-term charts, which says Bitcoin is in historically undervalued territory right now, cheap territory right now, they could be broken. I'm not 100% sure about that. Again, I don't think it's that special that I have to buy it, lots of it, at 20K. As I kept on saying, if I just buy a house on a beach like this, I could 10x my money in a few years' time as well, because I'm using, the bank's money. I'm just borrowing 90%. And it's a lot safer, a lot more stable than Bitcoin. But however, if it goes lower to 15, 12K, something like that, and then I would seriously consider making massive purchases. It's not that I don't think Bitcoin will go up into a bull market. I do think so, but comparing to houses, other stocks, what good houses on a beach where what stocks can't go up 5x or 10x. It's technology. You're supposed to be able to trust it. That's why I always think, can you put all your nested eggs in a hardware wallet, cold wallet? The governments are not all bad. They're there as the backstop. If you lose your deposit in the FDIC is meant to come in and rescue you. If it's not over $500,000 or whatever. So, anyways.
Yeah, I mean that's a real problem. There are people that lose their life savings in Bitcoin, even though they're experienced, even though they've had Bitcoin for 10 years.
Yeah.
They still could lose their life savings in Bitcoin if something goes wrong. There was a guy who downloaded an app from the App Store that looked very legitimate. It said it was like the Trezor app or the Ledger app, and it was in the App Store. It was approved by Apple, and there's 1,000 things that can go wrong, right? I mean, I did some research on, what if your wallet generates the same seed phrase as someone else's wallet? Can that happen? Shit. Is it possible? It can actually happen. It's actually totally possible. It's a very, very, very small chance. It's a ridiculously small chance, but it can still happen. So that's a really good point.
And what are the chances that other guy has more Bitcoins than you or I do, Brian? Chances are, by the sheer laws of probability, if that ever happened, the other guy is a shrimp. Whereas, you're like a Bitcoin shark at least. So they'll open that wallet one day and go, "Woohoo! I'm rich."
I wonder if that's a hacker strategy, actually, to try to just generate as many Bitcoin wallet addresses as you can and just see if there's some in there that someone had before. I mean, it sounds crazy, but you never know. So how much do we? In
the days of AI, you don't even need to. You can just run algorithms all day and it can generate like thousands per second or whatever the number is. So if they can trick major crypto influencers into losing their NFTs and cryptos in their wallets, they can trick 99% of the people listening to this. That's my view.
Yeah, I mean, on the other hand, can't they take your gold too? I mean, it's just pick your poison, right? It's pick your poison.
Hang on. They can, but and they did. That's what I've been warning about. In 1932, Roosevelt, the great American president, Theodore Roosevelt, actually signed into law to ban or prohibit all private ownership of gold, because gold was going to be the backstop to United States currency. So gold was banned until the 70s, in theory, in private ownership. In practice, they couldn't enforce it. But that's why, here's the thing, that's why it's all about diversification. Have a little bit in gold, have a little bit have a little bit in Bitcoin. Each has its own advantages and disadvantages. That's why I disagree with the folks who say gold is dead and all in Bitcoin. And have a little bit in property and put it in different countries on both sides of the Cold War. On both sides of the Cold War, so that just in case one side wins or gets nuked, you can always run to the other side and still have a house there or two. And that the world is becoming more and more volatile. We're hitting that 100-year cycle. So I think it makes sense to diversify. I mean, some people would play a lot more aggressively than I do, and I understand why they do that. They would basically be like, I'm going to be all in Bitcoin or all in Tesla's options or whatever, and try to do the whole buy Lambo on Monday, thing. It's not for me. It's not for you, because we got families, so we've got properties. We don't need to do that, but some people would. I get that. Yeah.
But I mean, don't you think it's bullish for Bitcoin, Pablo, that you and I have had private chats about real world use cases? I mean, we both said, man, we really should own some Bitcoin in case this happens to Australia, United States, Europe. Like, that actually kind of makes me bullish on accumulating, and not just for an investment, not just when Lambo, but also because I really want to protect myself from all of the risks that are happening right now with currency and world superpowers. And I mean, it definitely has a legitimate use case that's been proven by gold that the rest of crypto doesn't have yet. I mean, yes, Ethereum is awesome. Smart contracts are so cool, but show me the real use case. I posted something a few days ago where I said, raise your hand if some crypto, not Bitcoin, some other crypto has changed your life on a daily basis. And I don't mean like it's made you rich because you invested in it. I mean like the use case of it. Like where has it, actually made your life better? And I didn't get any responses, right? Like Bitcoin clearly does do that and can do that. But, that's why I was saying earlier that there's a divergence right now between Bitcoin and crypto. Like 6 months ago, it was the same thing. Bitcoin and crypto, nobody really cared about the difference. It was just like Solana, AVAX, whatever. But now it's very clear that like crypto is not Bitcoin. Like Bitcoin is digital gold. It's a store of value. It's going to survive this downturn. It is truly decentralized. I would debate that all day long. And people say it's not decentralized. You're right about crypto. Crypto's not decentralized. Bitcoin is decentralized with the exception of, certain mining operations concentrated in certain countries, but it can easily move. If mining gets banned in a major world superpower country, a third world country that needs the revenue is just going to say, okay, fine, well, we'll mine Bitcoin and it'll be a great industry for us. And they can mine Bitcoin. It doesn't take a lot. It doesn't take nuclear weapons. It doesn't take highly developed infrastructure. You can easily mine Bitcoin. So in that regard, I do think it's true decentralized digital gold.
Oh, by the way, Brian, during that time you were off, I had to make a very specific point to folks here in Spaces to wrap up, but I'll do a proper chat here. So, and this is something I think you'd be very interested in as well, because the chart I was pointing to, which basically said, hey, look, Bitcoin is at, that's not, yeah, I think internet is down again. Come on, you silly bugger. So people might remember this chart I was pointing to. Come on. Okay. Yeah, there you go. There's trusting in technology. That's put our faith in technology again. So here's the thing. Yeah, it's stuck, but I'll just show you what I'm looking at anyway. The chart I was looking at before is basically these sort of long-term charts of where Bitcoin was, and if you look at this trend line, when the screen refreshes, it's been supporting Bitcoin right up to now. And that would tell us, if we believe this trend line, that is a key support for Bitcoin. And it is around just underneath 20K and a wick below, and it's going to bounce up and all that. And you see a lot of these long-term charts like this. And what I was saying to people is that chart started in something like 2013. And basically, in 2013, the environment for since then, for the last 9 years, when in fact in the entire history of Bitcoin, the environment is basically just one of federal accommodation, of Federal Reserve easing. So let me turn the camera around. What I'm saying is this. Every chart you look at, historical chart of Bitcoin, says Bitcoin is in huge discount right now by historical standards. This has only happened like 3 times in Bitcoin's history. It's come down to this band and it's super cheap to buy. I agree. If Bitcoin was at 69,000 right now, and I would pray that Bitcoin ever get down to the lower support line on whether you draw it as a straight line, as a support line, or you can draw the LGC, what they call the LGC, logarithmic growth chart support line. There are so many lines. There are so many metrics. You look at the what they call the RV and V metric. There are so many metrics you can use to measure Bitcoin, and you can say that it is really cheap right now. However, what I would say is all those metrics, all those trend lines are from the last 13 years in which United States has gone on unprecedented monetary support. Put it simply, printing money and zero interest rates. 9 out of those 12 years, United States has zero interest rates. And for 1 year, it had something like interest rates above 1% out of those 12, 13 years. For one of those years, it had a QT, quantitative tightening. What we're in now is quantitative tightening at twice the amount as last time and 3 times faster, because it took them like a year to go to ramp up QT to $50 billion a year. And even Trump's Twitter said, please stop with the 50 Bs, right? Now, the thing is, now they're going to 100 billion, and they're going to do it by September, if I'm not mistaken. Like 3 to 4 months, they'll ramp up to 100 billion. So it's a lot faster, a lot harder, like JO6. Like I said, it's going to be rough. You're going to get it, but it's going to be rough. Also, the rate hikes are so much faster. Last time it took them like 2 to 3 years, starting from 2016, 2015 to 2018 to get their interest rates up to like 1 point something percent, close to 2%. Now they're going to do that in 3-4 months. That's why I kept on saying this time is different. People said every time when they raise high interest rates, markets actually go up, markets actually rebound. That's why people were saying there's going to be a melt up, there's going to be a melt up. I was like, I cannot discount that 100%, but I literally sat on a beach somewhere, maybe not this one, but a different beach somewhere, and made one of those earlier videos from 2-3 months ago when I first started doing these longer videos on YouTube, and I said, that's likely not to happen this time. Look at the facts. Before, stock markets and crypto goes up as interest rates are rising, because they would say, have a meeting and say, oh, should we do 25? Okay, let's do 25. And then for the next 3-4 meetings, they do nothing. They wait and then say, oh, we'll go up another 25. And it takes them 2.5-3 years just to hike rates 1%. Now they do 75 basis points in 1 month, and next month they might do another 75 basis points. They say 50 right now, but it could be another 75 depending on what the inflation number is coming out on the 10th or 11th of July. If it's going to be a terrible number in 3 weeks' time, then yep, 75 basis points. I wouldn't even rule out 100 basis points if we get a terrible number, provided we get a terrible number. So what I'm saying is, to use a statistical term, the regime that Bitcoin has existed in has now changed. To use layman's terms, essentially, all the charts, all the metrics we're looking at, that shows whether Bitcoin is cheap or not, or at support or not, or were all done during 12 years of massive United States Federal Reserve money printing. Now, for the first time, I would say, since 1979, we've had the hardest tightening, Federal Reserve tightening cycle, and it's likely to continue. So therefore, I think all the old charts may not work. If it was for my own private investment, I would just say it's not going to work. I'm 70% sure of that. But since I could be wrong, and some people are going to cry if they miss out on 17K Bitcoin, I would say, don't listen to me. I can't be 100% sure. If you love Bitcoin that much, dollar cost average in. But I keep on stressing it's not that special anymore. People say things like, it's never done 4 weeks of weekly red bars. Now it's done 9 in a row. It's actually, in fact, done 12 in a row, except 1 week where it just did a little bit of green. People say it's never gone back to its old previous high before. Now it's done that, and done so by a huge margin. And people would look at those charts, including me, and say, that is hugely cheap. It's coming back to like a 9-year support line. Every time it touches that line, it's cheap. It's bottom of the market. Could be true. But I just keep on reminding myself, we're not even, people compare this rate hike cycle, this tightening cycle, to 1994, where they go, oh, they did a 75 basis points tightening in a rate hike in 1994. I would say, no, man, we're not even in 1994. We're in 1979. Because in 1994, they didn't have stagflation. What happened was you basically had inflation and they hike rates and inflation really fast. That was Greenspan in 94, and they hiked 75 basis points. That's the last time they did it. It was like 28 years ago, and basically markets tanked and stocks and the economy tanked, and then they just basically stopped, and they turned around really quickly, because what happened is economy tanks, stocks tanks, then you have to come in and save the economy, save jobs. This time is different, because this time, not only are they hiking by 75 basis points, they're also doing QT, quantitative tightening, by $100 billion a month, which hasn't been done before, from my knowledge. And they're about to ramp up to that. They're already doing what is like $25 billion a month right now. They're going to ramp it up step by step to $100 billion by September, from memory. So that's already very different from 1994. And number 3, we have now stagflation. We didn't have stagflation in 1994. So what could happen in a? I'm not saying this will definitely happen. I'm saying what I said to my Discord was this, and it's going to sound laughable, because people are like, oh, it didn't go down to 20K. Well, those idiots are paying for it now, right? So I'll put my opinion out there. I think in the next 2 years, more likely to be specific, in 6 to 18 months, which is end of 2022 to end of 2023, I think the United States is going to go into stagflation of some sort. People who know more about the economy than I do, the bond king, Jeffrey Gundlach, has said he expects inflation to come down, but to high sixes, like 6.8, 6.9. That's say if even he's been pessimistic. That's say if it comes down to 5%, right? That's really like from 8.6% down to 5%. That's still way too high for the Federal Reserve. Unless unemployment goes above 4.5%, the Fed would still be tightening, will still be keeping a tightening stance. The U.S. economy, I think we'll see in the next 3 to 6 months, the manufacturing, the services sector, the consumer confidence are headed straight down. In that scenario, you're going to have two things that's going to kill Bitcoin. One, the rates are going to be really high. We could see interest rates at, say, 2.5, 3% and they keep it there, for another 6 months. We could see QT of $100 billion a month, and they could keep it there for like 6 months. And inflation still wouldn't come down. According to Jeffrey Gundlach, it would be like 6.9, and he knows more than I do. He's the bond king. He's a billionaire. Let's say if he's wrong. Let's say if it goes to 5%, even 4%. That's still way above where the Fed's target is, which is 2.5 to 2%. In that scenario, where would stocks, especially the NASDAQ and Bitcoin, be? A lot lower. And people say, okay, maybe that's been priced in already. Okay, I'll give you that. Maybe that's been priced in already. But have you priced in the fact that the US would be in severe recession by then? Because if you keep that kind of QT and high interest rates up for that long, then corporate profits like SP 500, their earnings would be down like 20%, 30% from now. Like you would have earnings guidances saying we're not going to meet that earnings growth. In fact, we're going to be down 10% on almost 90% of the companies across SP 500. Stocks are going to tank more, and then is the time to come in and cut rates back down to zero really quickly and stop QT and QE. And yet the Federal Reserve cannot do that because inflation's still going to be like 6.9, 5.9, 4.9%, and that's still way too high. Now, here's the thing. I'll say this, so I hope I record this sentence for the record. I think in the next 6 to 18 months, or end of 2022 to end of 2023, we have 10% chance the US is going to achieve soft landing, or it's going to be fine economically. But a 50% chance US goes into recession, and with inflation, I mean stagflation. And also a 40% chance United States goes into mild depression. I wouldn't call it the Great Depression. Some people call it Great Depression. I would call it mild depression, because I do believe that as soon as you have shit hits the fan, as soon as you have basically unemployment above 4.5%, Federal Reserve comes out and says, we have to choose between bad inflation and bad unemployment. Oh well, you always choose jobs. Like you always choose jobs in that scenario, and they're going to cut rates back to close to zero, and stop QT and start quantitative easing, printing money to like $3-5 trillion in a year, to an amount we have never seen before. I just like to put that message out there. That's my thinking for the next 6 to 18 months, which is end of 2022 to end of 2023. I think something like that's going to happen. It sounds kind of crazy. No one on Wall Street is saying that, but that's my thinking, for the record.
Yeah, I mean, it already has been shown that this cycle is different in just about every way possible, right? We already know that this crypto Bitcoin cycle has been different. And now that we know that, you guys can take that information and make more educated decisions with that, because we don't have the same predictability that we used to have. And that might look different depending on your scenario and diversification and everything. But don't you think that the Fed meeting was more hawkish? He was more hawkish than I expected. I mean, there was a few reporters that were. I mean, I guess given the rising inflation, rising CPI numbers, my expectations were a little bit more hawkish. But he basically said, "What good is jobs if your wages can't buy the goods and survival that you need?" I actually recorded that line. I was going to make a video about it, but one of the reporters stood up and said, But what about jobs? What about jobs?" And he literally said, "Well, what good is your job and if your money can't buy anything?" And I was like, "Whoa, that is an aggressive statement. This guy is serious about inflation." And you know what, guys? A lot of Bitcoiners, a lot of you crypto guys listening, we don't like the government. We don't trust the government. We don't trust fiat, whatever. All that stuff is fine. But you better believe that the Fed understands the danger of inflation at the rate that it's at now. They know this is serious. And this isn't just political games and posturing. This is like the kind of serious that can ruin a country. This is like the kind of serious where when they're in their back rooms talking about it, they're not smiling. They're like, "Oh shit, did you guys see this inflation? This is like really serious." So this is not fun and games anymore. This is hardcore stuff we're dealing with. Pablo's been telling us that it's hardcore forever. Back in the bull run, Pablo was the only one saying, "You guys wait, let's see what the Fed does. Let's see what the Fed does." And all the other influencers were laughing. They were like high on hopium, like, "Bitcoin is so beautiful, it's going to rescue us." Pablo's like, "No, it's not. Wait till you see what the Fed does." But this is serious stuff right now. Everybody really needs to understand how serious this really is. An inflation level at this level is destructive, and they are going to be aggressive. They're going to be hawkish. They're going to continue to do that. And it's, Pablo used the word mild depression. It's possible because it can create a death spiral in stocks with decreasing earnings, and it's that can happen. It can be a crash, not just a correction.
Okay, thank you for that, Brian. And I would like to say that Brian was also one of the sensible ones who actually said take profits and basically Bitcoin. We're actually really bullish on Bitcoin. But we live in the real world. We're just not saying it's going to go to 300K this year. We think it'll definitely go to 300K in a few years, maybe 10 years. Not financial advice, but it's become so extreme that people can't even accept bullish guys like us anymore on Bitcoin, and they have to. Yeah, if you don't say Bitcoin's going above 100K, then you're a Luddite, or you're a bear or whatever, and anyways, the Brian made a number of good points there, and what I'm trying to say is, I thought the Fed wasn't actually as hawkish as what I thought. Now, here's the thing: the market has actually priced in something like, for the next three meetings, before he announced 75, the market priced in 75, 75, and 50, maybe 75, three in a row. And yet he came in and said 75, but it's one off. Next one, possibly, most likely 50 again. That's essentially what he said. And I was like, what? And the futures market for the Fed funds rate instantly came back to 50. The market, those bills just went straight up. And so which means rates came down from 75 to 50. The market was wrong-footed on that. He wasn't as hawkish. Now, but the thing is this. When he said, Brian, I don't think we should freak out when he says stuff like, which you thought was hawkish, when he says stuff like, "Oh, what's the good point of having jobs if people can't buy the necessities with the money wages they make from those jobs?" Brian, he could afford to say shit like that. He could afford to say that because right now the job unemployment rate in the United States, the way they measure it, the unemployment rate is at 3.6%, which is the lowest in American history. So therefore he could say, "Oh yeah, jobs be damned. I don't care about jobs. I care about inflation." Of course he can say that when jobs at lowest level in recorded history. Of course, the way they measure it is dodgy, but that's a different conversation. However, that's hear him say that when jobs get to 4.5% unemployment, then because right now every week I bet Biden's calling up Yellen saying, "Yellen, get your boy, at the Fed in line," and she's like, "What are you most concerned about?" Inflation, inflation, inflation. What about unemployment? Who cares about unemployment? We're at 3.6%. I'm going on Kimmel next week, and I'm saying we have the lowest. Biden could say we have the lowest unemployment rate in history under the Biden administration, right? Not the Trump administration, not the Bush administration, the Biden administration. He could still claim that for the next 3-4 months, right up to November, the midterm elections. They don't care about unemployment right now because the way they measure it is the lowest ever. That's why the Fed can be cheeky and say, jobs be damned. What about jobs? People need to be able to buy the necessities to live, to survive with the wages they have. Inflation's everything. Yeah, that's hear them say that at 4.5%. I'm a bit rough on this, so I need to go back and look at real figures. But my guess right now, without looking at specific numbers, is I think they're going to start acting around 4.2 to 4.3, 4.5, that band. When unemployment gets that sort of area from where it is now, 3.6, and inflation still high-ish, like say 5 to 6%, I think then they'll say, damn, jobs mean everything. Inflation. If we have to choose between inflation and unemployment, we choose jobs. We're gonna bring rates back to close to zero, below 1%, whatever it is. At least stop QTing. Maybe not QE, maybe not print money yet, but stop QTing. And then if we get like a severe recession or mild depression scenario, boom, they're gonna go in and do that whole money printing, rates at interest rate at zero business again, and stimulate the heck out of the economy.
Yeah, it's funny because the whole crypto market and stock market right now is propped up on leverage because money was so cheap. And in that sense, I really could see a crash coming and even more downside because not only is that liquidity drying up and all of these venture capital firms and, MicroStrategy and these backers, everybody who's funding this whole thing, interest rates are higher now and they're going to keep going up. So money's going to be more expensive. But we're already seeing the loss of confidence in the crypto markets with Luna, with Celsius, with people worried about MicroStrategy. So it's a double whammy. Not only are interest rates going up and money's becoming more expensive, but the leverage that we had, even at low rates, also is collapsing. And when rates were low, the crypto markets did not build something sustainable. I would have been really impressed if Celsius would have come out and said, if you guys don't know, if you guys are just tuning in, probably most of you guys already know, but Celsius is a DeFi lending platform in crypto that froze all of their customers' deposits. And Celsius was painting itself as a very safe place to come. Put your crypto in here in the bear market, you'll get passive income, it'll be great. You could be on the beach like Pablo, because we all want to be on the beach like Pablo. But Celsius froze everybody's deposits, so they didn't even build anything sustainable while rates were low. That's beautiful, man. Look at that sand. Look at that. That's so pretty. How are they going to build something sustainable when rates are higher if they couldn't build something sustainable when rates were lower, right? It's crazy. It really is.
Yeah, so you can see this happens every time. I just didn't expect. I was expecting MicroStrategy to break down. I was expecting TRX to break down. I wasn't expecting 3AC, but that guy is a degen. He's got Chinese blood in him. He's basically a gambler. He's got the good old Chinese gambling genes in him. It's in their cultural DNA. So essentially, like in good times, if you get in trouble like this, you just go to some guy and you go, hey, come on, lend me some money. We'll get out of this because markets will rebound. Bitcoin will always go higher or at least do a big rebound to like, somewhere reasonable, and he could cash out and those loans could work for him. But now nobody's giving out loans because interest rates are higher and, junk bond yields are a lot higher. And that's why AMC's crashing. That's why GameStop is crashing. It's a different regime now, guys. It's a different environment from the last 12, 13 years. That's my main message. And people, yet people are still like, okay, I guess I'm a lot more pessimistic. I'm now a lot more pessimistic than I was before. I could be wrong. So it's always risky when I say stuff like this and it doesn't come true. But I wish, other times when it does come true, I wish I was like warn people more, because so many of my followers have lost so much in the last week or so. I don't want to make those videos where I laugh at people, but so many dickheads out there also was asking me to win 20k bitcoins all the time, and I just say to them, that was my message saying, well, now you got it, bro. Now you got it. Anyways, okay. That aside, I do feel for my other followers who have lost, and they're following me, watching me laughing my ass off, doing Les Miserables, when the market is tanking. I wish I warned people more. Right now, I'll say it again. So, at the risk of being humiliated online because Pablo is calling for a mild depression, I will say that look, guys, this time we are very likely to get some sort of repeat, a mild repeat of what happened in the 1970s, when Volcker jacked rates, the U.S. federal funds rate to 20%. I don't think it'll be anywhere near that much. Like 3-4% would kill the economy straight away. But however, in a stagflationary economy, back then, if you look at the 70s, so between 1964, like 1963 to around 1980, I would say the United States stock market, S&P 500, essentially went between 118 points to something like 66 points. It basically did that range, like between 118 points to 66 points, and basically that's like 17 years from 1963. Wow. Yeah, for 17 years it didn't move. And then the purple line on my chart is basically the Fed funds rate, and we see a huge spike here, and that was in 1974, and we see a huge spike in 1980 and 81, 82 to get inflation down. So we're about to get that again, not to 20%, but a huge spike in the interest rates to get inflation down, because that stagflation it's very similar, like stagflation due to a war, which caused oil prices to spike. And that is happening to a stock market that went nowhere for 17 years. Now we look at where the U.S. stock market is. It's gone from, measured by the S&P 500 in the 2009, it's gone from 688 to a top of 4,800. So that's almost 8x. So it's done 8x in the last 13 years. And then if they do the same sort of stagflation, happens, and if they hike rates to, again, we see on the purple line here, if they hike rates again to like a, I don't know, 3%, 4%, like that's only 2.4% around here. So if they get those rates really high, then I do think we're going to be in a lot of trouble. I think the markets will go down more, not just because the rate hikes have been priced in. I doubt if they're fully priced in, but let's say even the rate hikes are priced in. I would say that other things are still not priced in yet, such as U.S. going into a recession, and that's not priced in yet. And what about U.S. going into like a mild depression is even possible? I mean, I know I sound foolish calling for that right now, because nobody on Wall Street is saying it. But I think it's very likely to happen. 40% chance I would give it so I'll end it on that. I think between the end of 2022 to end of 2023, we have 10% chance the U.S. finds itself in a soft landing, which means economically it's going to be fine. But there's 50% chance we're going to recession. With this inflation we have right now, that'll be recession plus inflation, that'll be stagflation, and 40% chance it's going to be a mild depression. The reason why I say it's a mild depression is that because once the economy gets into trouble and you see unemployment get above 4.5%, or close to 4.3, 4.2%, then the Federal Reserve is going to come in, stop QT, start QEing, which is printing money, quantitative easing, take rates back down to 1% or lower, or even 0%. And that's why, but that will set up the big kaboom, the big collapse in a few years' time to come. And that's why I personally buy Bitcoins. I would buy a lot if it gets even more cheaper. That's the reason why. Because I do see a major collapse of financial systems, not just U.S. Wall Street, but right around the world coming. It is a new world order, not as in conspiracy new world order run by the Illuminati or anything, but it is what Ray Dalio calls a new world order. And so buying some gold, I'm buying some Bitcoin to get ready for that.